Alright, I want to take a look at Cobra 5B. This is one of my best strategies. It's in the low frequency portfolio and it is long today at 1330.50. I want to take a look at the TradeStation performance summary, show you how this is done. We went back to the beginning, very beginning of the E-mini S&Ps, which is November of 1997 is when the E-mini S&P started trading, and you get a performance summary. This is inclusive of slippage and commission. So when you look at taking out $25 per trade, which we're doing here on the settings, is take out $12.50 per side for slippage and commission, and you still have $44 average profit per trade on a day trade strategy for the E-mini S&P futures since the beginning of the S&P. So it's one of my best strategies. It's a long only strategy, pretty low drawdown over that time period, 55% profitable, 600 trades. Take a look at the chart. Here's the results. Pretty flat period in here. In 2000 it started doing better, and then went through a flat period in 2004 through 2006. But lately, I want to show you how well this is done lately. In the last 12 months, $6,437.50 on 75 trades after taking out $25 slippage and commission. So you're almost at $100 average profit per trade over the last 12 months. And this is based on buying dips. It's a long only strategy. In 2011 alone, we're over $100 average profit per trade after transaction costs. So this is a highlight of Cobra 5B. Also want to show you how you can trade this. This also works on the ETF SPY. So we get the SPY strategy here. We got Cobra 5 on SPY. This is Cobra 4 next to it. And taking a look at we're long today at 133.48. And we've had some trades recently here. Last one was a loser. Before that, 3 really good winners, and the losers have been small. So this is a very, very strong market overall. It's very, very hard to short. Anticipate continued strength in this, just based on how strong the market is. That is, the trend is up, and it's very strong. Not strong in volatility, but it just does not go down. So I'm not saying that it won't, but right now you have to go with what the trend is. Here's Cobra 4 along at 133.41 today, and I want to take a look also at our options strategies. We've looked at this option play for several months now. We haven't talked about it much lately. It hasn't done that much, but recently we've had a pop in option prices. We started looking at the March 1400 calls when they were around 80 cents, and now they've almost doubled. And we were looking at potentially 1400 by March, and maybe 1500 would have been a really strong move. And it's still possible by the time these expire. It's about a month and a day away from expiration on these, and so the 1400 calls could become even more profitable between now and then. We'd need a pretty good move, another 65 points just to get to the strike price, and then after that you get $50 a point. So also looked at the 1500 calls. Those are definitely not something you would want to trade at this point. But we looked at the March 1400 calls, and then the June 1400 and 1500 calls, and these have recently doubled in price. We started looking at these when they were around $10. So these are in June. They don't expire until June 17th. So you got another 4 months on those, and this might be the best trade to take right here because they're still very low price, about $100. You can get these for about $100, and for every point over 1500 you'd make $50. So if the market, let's look at the long-term chart, if the market were to make new highs in the next 4 months, 1576, you get about $3,500 on those June 1500 calls. So a $100 investment could yield $3,500 if the market were to make a 230 point move in the next 4 months. It sounds like a lot, but I want to take a look at this on a percentage basis to show you what could potentially happen. I'm going to enable the chart to percentage chart, and we're going to percent change chart, we're going to calculate it from the last bar where we're at currently. So currently we've made about a 45% move in the past year. We've made about a 45% move, and we have another 17% to go. You see the high price there, 17.829. We have 17% to go from our current prices to make new highs. And so in the next four months, it's possible with the strength of this market that we can make a 17% move in the next 4 months. Anytime you buy out of the money call options, it's a low percentage play. The probabilities are low when you look at getting a $100 option that could turn into $3,500. It's not a guarantee. It's a very low risk trade, but with a low risk trade, you get low percentage as well. So it's a potential trade to take if you want to take a very, very, very small percentage and even trade even one contract, one unit on this, and maybe turn $100 into $3,500, or depending on your account size, do more. So those are some of the strategies that we're looking at. Also, the gap fills. Take a look at those. Here's gap fill 1 and gap fill combo on the ETF SPYs. They've hit their profit targets for the day, which is 40 cents. And take a look at gap fills. We've got gap fill 1 at his profit target for the day, and gap fill combo, which has also hit its profit target for the day. So let's also take a look at how this is done on the month. So on the month, we've had this is taking out slippage and commission too. So we've got $2,075 profit on 18 trades. So over $100 average profit per trade, and that's just this year. Let's look at the daily results. Since the beginning of the year, we've had one $525 loser that got stopped out. We've had one $25 loser on the 15th, and every other trade has been a winner. So 18 trades, 16 winners so far this year on gap fill combo. Pretty good. We added it to the low frequency portfolio, which turns out to be a good selection. And you can get it in my book as well. It's completely revealed in my book, 7 Trading Systems for the S&P Futures. So I wanted to give you these updates on the Cobras, the gap fills, the options, and the overall strength in this market.